Good afternoon, everybody. This is Dan Hussey with AUDJPY.com, bringing you our European session, or London session recap. Beginning with the FTSE and the DAX. Let's begin with the DAX. It's kind of our odd child here. Front ran a full 50% long. We've been talking about this for some time. We're looking for the ambush long. Is at the 82.73, drawn from the lows. The lows at 80.80 on September 2nd to the highs of the month now that were made today that currently reside at 84.65. So looking for the pullback into the 82.77s and ultimately the rally back into highs and through highs to the 86.40 area. It's been kind of a choppy, slow market, and it has just decided to move. Not as technical here as the FTSE is, which actually has the next in the series pullback into the 65.29s. That would also fill the gap on the FTSE. It could also, very likely pull back into 64.84's full ambush long. This is trading just like the S&P, so 64.84s would be just like the S&P trading into its full long down at the 1653s. It would be a very similar level. Nevertheless, we're looking for 68.77s target to the upside targets from the 63.66 long, full daily long. And we're going to continue to monitor both the 65.29 and the 64.83 levels for the FTSE, as they do both give us the upside potential we're looking for and continuation to larger time frame targets. Alright, the British Pound. The British Pound has traded its extension long at the 156.90s. This is an extension drawn from the highs of the prior long. That traded multiple times and finally got its target filled. So we're drawing from the 156.47 anchor to highs. We have a 157 upside target. There is a full next in the series at 156.50s, but while we remain above 156.80, we are looking for the 157.53 targets here in the near term. So we're very close. One more push into highs, we'll get those targets filled, and then the pound will be in extension longs that we will then draw same anchor, new highs, taking us up into the 158 resistance area. The euro has held an extension long from Friday's high at a 31.90 anchor to highs. This high represents the highs right around the full pullback that we had right after news, after we broke our Globex short. Market pulled back. It was a sloppy pullback, but they are using the highs to highs extension long here for that pullback. And it's the original pullback. It's at the 31.80s or the 31.90 high. Either one really works here, but we're looking for a push now to 133s. Inside of this trade, from the 15-minute perspective, we broke a full short off of our prior highs. Friday, were those Monday highs? Yes, we broke a full short off of Monday highs to today's lows, giving us an ambush long at the 132.52s that has traded and gotten free. So this is keeping pressure, and we're flagging in between the full hourly short, or it's not even a full hourly short because this short traded after, but we are flagging between the full short off of prior highs, which I need to make as purple because we only have this up as a watch. We're looking for the short to break because we know we are in the much larger 4-hour long that we actually participated on at the 131 level. That is upside targets at the 136. So like I was saying, we're looking for a push to 133 today. Hopefully we'll break the 133.20 6 to 8 line of this full short, and then we can start drawing up the full long in anticipation of an ambush long, which may never happen. We could just trade extensions here and continue in extensions all the way up to the 136 targets. There's nothing says we couldn't do that, but once the short breaks, then we have another valid ambush long. So if you did miss the original euro entry, there might be an opportunity to get in and trade it on the way up. But I don't want anyone chasing the market. The extension has traded, and unless you took this extension and got free, there's not much to do in the euro because we are still in that short, and that's something you have to be cautious of. But hopefully we'll get that push to 133.20 and we can breathe a little bit easier. The Aussie dollar. I've talked about yesterday and earlier today how we've broken our extension shorts now. Broke the 6-18 lines, so a full ambush long off of our 88.48 anchor low to 93 highs is valid. We have identified extensions drawn from, let's go down to a 15-minute time frame so we can see the 15-minute or smaller time frame longs we are in. The extensions are drawn from a 91.88 anchor to highs here. They traded two targets here at the 93.14s from the 92.40s. Extensions, we draw same anchor, new high now, and the next in the series would be a 92.50. So we're seeing markets almost across the board becoming incredibly technical, and this is the time when, okay, hey, let's start taking these trades. Let's start putting on these intraday scalps. Let's start picking sides, getting free, and letting things ride. Because this is very unlike what we saw all summer, which was 50% lines continually breaking on both sides of the market, lots of chop, lots of sideways. This is what trending looks like, and this is when you need to know how to identify it and when to start actually participating, because we have spent a lot of time on the sidelines and getting chopped up a little bit. So nevertheless, we have 92.50s. We're in longs on the 15-minute time frame, well above a 92.30, and we're looking for, after 92.50s trade, we'd be looking for a push to 93.40s. The Euro Aussie, definitely in shorts here. We have run into, and Irish pointed out to us, this is probably best viewable on a 4-hour time frame. While there is the daily extension pull from a 131.98-ish or 130 to 132 anchor to highs, there's actually an extension long that has traded multiple times here to target, and it's drawn from the 135.20 anchor to highs. It's traded once to target, twice to target, and same anchor, new highs here. This would actually be the third time it's trading. If you notice, the 141 level aligns with the 618 line, so either one of these polls could actually end up being valid. And what I mean there is that we could trade down to the 618 line of the one. Personally, I'm waiting for the big daily long, but you could trade down to the 618 line of the 135.15s and then have filled the daily as well. So there's definitely a support zone here from 142.50s through 141s that we're going to be watching. Any break in our short trend in the Euro Aussie, I would like to get into a swing trade long in the Euro Aussie, looking for a 154 objective. So it's a huge 1300 pip objective for what could be a very little risk, and we need to keep our eyes on the ball here because we are entering into this support zone, and we have been able to identify where extension shorts reside and how they are trading. So I would personally want to see a break above 144.80 before pulling into which would be a break in the extensions that have traded down into this level. But if we do begin new extensions, we'll have a new micro and a new setup to break, which is actually looking like what is potentially happening here. So it looks like making new lows here. It looks like the market is trying to pick up in brand new extensions, which is also a micro Globex short here. So we'll see what happens. But I'm keeping my eye on the potential for a swing trade that we can get in on for much smaller risk, similar to what we're planning on doing with the Aussie yen, which we'll go over in a minute. We can use get in on these in much smaller risk without having to buy the market and risk 300 or 400 pips for the 1300 gain. We could end up risking only 50 and being able to get free and giving our shot at that nice swing long. Nevertheless, Well, next in the series, extension shorts are at the 144.26s. Above a 144.80 would break this extension short, potentially give us an ambush long. We are seeing micros hold. We've seen a traditional here hold after, which I want to after the prior extension, which I want to mark as purple. And this resistance level that's traded, if it goes to target, we'll be drawing up new extensions. A break of those new extensions would give us a reversal. But we have seen a Globex short here hold today. Next in the series here is getting front run by about 6 pips, and does actually remain valid. So we do have a little bit of downside pressure here. I'm really looking for the 141.16, 141.10 support area for the Euro Aussie, and I'm going to be looking to get into that swing trade on a break of our short trend. So kind of just keep monitoring the shorts, knowing we're at support, and if there's a break, we have an actionable setup. The dollar yen looking very bullish here. We have broken trendline resistance in a triangle which is a down in A, up in B, down in C, up in D, down in E. So this is the completed triangle that I see in the dollar yen. I have potential upside targets here of the 108 for the breakout of this triangle. We have actually broken out of the triangle, and we've already performed what is called the KYM, which is typically when you break out of a trendline resistance in a triangle, the market will pull back into a retest of the trend line here. It also happened to align with a next in the series long. This next in the series long was after we traded defended a 6 to an 8 line. The original long that pulled hit targets. We went through targets here, but we did pull into the next in the series drawn from entry lows. The lowest low that occurred at the entry prices to highs here. Traded to the tick along with this trendline resistance. We have upside targets of 101 right now, 101.05, and ultimately we are inside of this much larger level. So again, we at any point in time we could pull back into a full 50% long, but the dollar yen going down to even a 15-minute time frame, upon breaking prior, we gapped up and broke shorts. Market pulled into a gap fill and into a long, traded to its target today. Next in the series now is drawn from a 99.34 in the 15-minute time frame. So we have supported a 99.30, and then maybe we have support at the. I should just take this off. Next in the series here at a 99.90 that potentially could take us up and into that 101 level. Okay, so watching that closely. Euro yen, we haven't been talking about this on anything but above or below a 4-hour time frame, as we are looking for the 134.60 upside targets. But going down to a 50-minute time frame, we're able to reverse engineer an extension long that resides at the 132.60s, which probably will coincide with that 99.90 in the dollar yen, as well as an extension long here at the 92.60s in the Aussie yen. So I'm trying to find confluence of trend between our yen crosses, because they all like to move together, and ultimately I think that's what we're seeing is there is potential pullbacks into support levels in all of these yen crosses. So there's definitely some yen weakness, and that is the prevailing trend right now for these markets. The Aussie yen, we have also broken our major 4-hour extension shorts. Those are drawn from the lows on May 31st at a 96.06 anchor to lows. It had traded twice before, once the target, twice the target. Same anchor new low has broken now, and we are looking for the full pullback into a 90, into the 90. Whoa, that's not right. Let me get this right. We would be looking for a full pullback into the 90 level right now. There is an extension long drawn from the 91.60 anchor to highs. and basically below a 92.35, we'll be looking for the full pullback into the long. Until then, we're going to trade this 15-minute trend, this beautiful hourly or 15-minute trend, until it fails, and just participate on the Aussie as much as we can without actually being in a swing trade. So we're going to be a little nimble. Looks like a good setup to me at the 92.60s. It has a 140 pip upside target, and for only a 30 pip risk. We will be below 92.35s. We're looking for a 250 pip decline to continue down to the 90 level, where we will be buyers in a swing trade, and ultimately risking just under 100 pips for a potential swing to 113s. And that type of trade, hopefully the Aussie yen doesn't decide to come down and retest its 88.60s. If it does, we'll monitor shorts and we'll get in a swing from that level as well. Because I don't want to say I've fallen in love with this trade, but we've been tracking it and we've been watching and waiting for it. I think we've probably been talking about this since the beginning of the year, so it's been months, going on months now, and it's looking like it is ripe for the taking. So. Finally, the S&P 500, valid extension longs drawn from the 1664 quarters. Most importantly, today we have broken the full short off of all-time highs. This kind of confirms, this break of that full short confirms our, a push really to our upside targets of 1740s that is coming, and we have a valid pullback now at the 1653. 1654s, if it even gets there. That pullback would be an ambush long that would take us into a retest of highs. However, there is an extension long drawn from the 1664 quarters to highs now that could very well continue and take us up into those levels. We have left two open gaps below us. If I was to right now pick what was going to happen in the S&P, I would actually pick that we sell off a bit here down into the 1654s, potentially very quickly, sometime right around options X, and over the next few days, it could happen very quickly. Fill both of these gaps, and then continue. Continue higher just as quickly as it came down, because it could fall those 30 points like in a flash right around options expiration. Wacky stuff happens, and this might be one of those wacky things that occurs. So keeping our eyes, futures roll over in 2 days, options expirations coming up, and this could be a very wild week for volatility. It typically is. So, all right, everybody, that's all I got for you for our London session recap. Gold. Gold has come off of now a full short off of its prior highs, so we did trade into that ambush short. That is after we broke our extension long. The ambush shorts have finally picked up and traded. We have a downside target of a 1340 in the near term. We're ultimately looking for the market to travel down into the 1305, 1300 area to test the ambush long, which is actually that 4-hour ambush long. Let's bring up our daily chart here. Is actually after the break in our extension shorts, would be a ambush long after a break in extension shorts for gold. Gold also could trade, and because it's broken its big daily uptrend, which has taken about 2.5 years to kind of break and set up, actually gold has a valid ambush short at the 1550s. I know a lot of gold bugs probably don't want to hear that, but I entice you to be more patient, because there's actually an unbelievable opportunity in gold if it gets there, all the way down at the all-time halfway back at the 960s. These all-time halfway backs, they hold. They work. We've seen it work in the S&P twice in its history, once back in the 70s and in the 2000s. The lows of both occasions were all-time lows for the S&P, or were from 50% drawn from an all-time low to all-time high. We have seen the Eurodollar continue to hold the 121 level on every major test. That represents an all-time low to an all-time high for the euro currency. So these all-time 50% levels, gold's happens to be right around 960, but 1,000 it would be a big psychological level to watch. These all-time pullbacks represent unbelievable opportunity for the disciplined investor and for the person who's looking for value in something. I believe that's where the value in gold resides, is down at 960 still. So it's going to take some time to get there. There's going to be lots of up and downs between then. Lots of people saying we're going to 4,000 in gold. Lots of people saying it's crashing to the floor. But if we're trading 960s in gold, that's what we're going to start to see and think about looking towards what is the market sentiment, because gold is one of those, as one asset where the market sentiment is unbelievably, uncannily a great attribute to follow. Great example of this is just 2 days ago, JP Morgan closed their sell recommendation on commodities, and that occurred right here, right at this top. Ever since then, once they closed their sell recommendation, we have sold off. In other words, market sentiment in gold seeks to be a great contrarian indicator. When we start trading down to 1,000 or below 1,000, you're going to hear everybody screaming from the rooftops how you should buy treasuries, how you should buy the dollar, sell gold, it's crashing, it's going to be an apocalyptic kind of view on gold, and that's going to be the opportunity to strike. If you, personally, I would say go buy physical for starters anyway, but if you're a gold bug, I urge some patience here. I think that there's going to be a great opportunity for some low-hanging fruit in gold in the next potentially a couple of years. I mean, this could take a long time. I mean, it could travel up to 1550s. It could break that short, then come back down. So there's a lot that could happen in the macro dynamic picture that drives the gold market. So anyway, enough of that. Most importantly, our charts give us price levels to participate on, and there is an ambush long at the 1300 level if you are feeling a little less impatient, but we're seeing shorts hold off of the prior highs, so I really wouldn't participate in a gold long without a break in those shorts. Okay. Anyway, oh, yep, little micro here on the going to micros on the S&P today. We are trading basically yesterday's high to today's high is an extension, and that's what's holding. We broke full shorts off the 1683 micro high. Upon breaking, we pulled into an ambush long, and that ambush long is traded to targets, and it looks like we've already traded the next in this series here as well. So we're in longs until we're not. We have bullish divergence on the day, which means our high in the tick is not the high in price. And while bank is not exactly ripping out, it certainly is positive on the day, and you can see how well they've been tracking together and how technical the market's been. So with that being said, everybody, have a great day, and we'll be back with you as price action develops.